Okay, I'm back with another video here. So this video is going to be about key levels, what they are, what I determine as a key level, and what to look for in each time frame. Now, to me, a brief overview of what a key level is an area that causes a reaction in the market that then the next time that price comes back to there, it could cause a reaction again. Therefore, history repeating itself. Therefore, looking for the right things in that key level to then for you to then take a trade. Now, each time frame has key levels because what happens on each time frame happens on every time frame. That's like if you took away time frame from candles would still act the same. You just couldn't tell what time frame it is. So you always have to remember that. But the difference is that the higher the time frame, the more important that area is for the longer amount of time, basically. So, say for example, a 5 minute lower high and a 4 hour lower high. The 4 hour lower high area is going to be a key level for longer that has more likelihood to create a bigger move due to it. But it's still going to look like a 5 minute version, but it's just going to be a bigger movement, basically. So let's just hash it out now. So I'll just use anchor text. So I'm going to write out what are key levels. What are the key levels in my eyes? What are they? So there is structure levels. So structure, support, and resistance. There is high and low of candles. So especially the 1 hour, 4 hour daily for my particular way of trading are particularly important. Break and retest areas are also a great key level whenever price is trending and in momentum. Break and retests are usually respected because it's that kind of old thought process of, well, an area that was protected by buyers, if it comes back to there, should then be used by sellers because they're the people that move the markets are switching their bias essentially. So structure, support, and resistance, high and low of candles, origin of impulse moves. So they're usually going to be basically support and resistance as well. And yeah, that's all I can think of right now. So let's just look at a time frame. So and round numbers. Round numbers are key levels as well, now that I remember it. So I'll just be adding different things because, again, I'm doing this for you. I'm doing this so that you remember. Because I know that I'm speaking it out, but it's also I'm writing it down. It's there for you. It's there for you whether you're working with me or whether you're not, whether you fully trade the way that I trade or whether you don't. It doesn't really matter. If you don't have these areas, then you need to work out why that is. Why do you not feel that these areas matter? And I'm sure if you actually looked at it, you would find that they do. So let's just look 4 hour chart. Obviously, it's the same for the 1 hour, 15 minute, 5 minute, etc. Now, obviously, I use the 15 minute, 5 minute key levels whenever my 1 hour and 4 hour is in trend and momentum. That's whenever my 15 and 5 minute levels come into play on their own because essentially my thought process, my logic is that, well, if price is in such strong trend and momentum and I'm looking to day trade, then by the time the price comes back to a 1 hour or 4 hour area for me to look for an entry, it's probably going to be too late. It's probably going to have changed the direction on the lower time frames. Therefore, it will then take longer to redirect into my direction, and then I'm better just waiting for price to sort itself out. So just looking at pound dollar, what have we got? Well, I'm going to work with current price action. So we have break and retest area that could be respected. Now, obviously, it's against the trend just now because the trend is up, but this is a break and retest area. And even if it's against the trend, because it's a 4 hour area, it should cause a reaction. Now, let's look at structure. So we have this structure support once, twice, 3 times been respected. So we had that structure support. We have this area of that has been reacted to now. So it will soon be. This is basically the reaction rate happening now, but this is a bullish break and retest area. Resistance, ton support, respected. If this bullish candle closes as it is with 16 minutes to go, then that will create new support after a reaction of a break and retest area to the upside, which then could cause the origin for the next push up. We expect a reaction here on its way up, but how long that reaction lasts, it could just be a 15-minute, 1 hour candle or whatever, but there usually is a reaction due to the higher time frame that it is. So we have this break and retest. We have the support down here. I just connect it to this body, but it brings in this whole body wick area. Then we obviously have the round number of 1.37, the high and low of the candles, so obviously daily 4 hour candles again. Then we have the structure resistance up here. Again, we obviously have clear resistance, clear structure elsewhere, but to me, I work with the most recent key levels. Like once, especially in the 4 hour, once price closes and creates a new support or new resistance, I'm going to move my my line to then line up with that. So this one will then close. I'll then move this up into here. I'll still be aware of this area, but price isn't there right now. So you've got that. And then an origin of an impulse move is somewhere like here. That's the origin of an impulse move that's had a strong push to the upside. This was another impulse move, but we've had a reaction off of it, so it's not valid anymore. This is an impulse move as well, but it's a very big wick. I usually make these purple. That's just my usual code for them. So purple in there. And yeah, there's usually a reaction the next time that price comes back into origin of a push. So there's break and retest, structure, round number, high and low of candles, origin of impulse moves. To me, those are the main key areas for key levels that you want to be marking out. And if you can mark them out well consistently, especially in your higher time frames, then you're going to see a reaction. It's then just about the timing aspect, which you can work on yourself, or you can get help from someone else to get that side of things more intact. Then you've also got breakout, break back ins as well, especially in the higher time frame. So this area here could be a breakout, break back in, which is essentially what a lot of people see as head and shoulders. So if I just write that down actually so that people write it down themselves. Break out, break back in. Essentially a fake out is another key level that you want to be aware of, again, especially in the higher time frame. So what can happen is here is we have shoulder, head, shoulder, neckline, break, retest, drop. That could be That could be another option if price does create some resistance around here at the break and retest level. It's also a breakout, break back in level. It can be an area that makes sense for sellers to come in, and because it's on the 4 hour time frame, that means that it's going to last a decent amount of time if it is reacted the way that it can. So if you mark, as you can see, we have a few zones. It's all there for its own purpose. It's all got its own reason. That's why I have the higher time frame 4 hour, especially on its own chart, because it is so important for a day trader. The 4 hour, the 1 hour, the daily, they're your main. If you can get them spot on, everything else is just timing. If you're in the right direction of the market, sometimes even if you feel as if you're in the right direction, it's not always going to be a winner, but more often than not, it is. So I hope this video has been useful. Just write down these, create, like, look at charts of your own, mark them up using these key levels, and then watch. If it's the 1 hour, 4 hour, whatever, give it a couple of days and you'll see the reactions, and then just start to catch up with price. Understand, right, okay, well, this reaction's happened. I should delete this zone, move it to the next one. Or if there's not been another created, like another break and retest level or more structure or whatever, then you just wait until it is, because there will be some created. And you just work with that. So yeah, I hope this has been useful for you, and I hope there's going to be plenty more videos like this in the future that just keep things simple but well organized, and you'll do well with trading.